Good morning and welcome to the ADS Securities Markets Update. We'll start our video today with a look at the major developments or yesterday's developments, especially from the UK and Canada. As we noted in our yesterday's report, the Bank of England official cash rate vote came in with a surprise, as the entire council of the Bank of England voted in favor to keep the interest rates unchanged, and the two members who previously voted in favor to raise the rates in the past few months, it changed their view again as the inflation fell to the lowest level since 2000 at 0.5%. However, the British pound also was able to stabilize the well above 1.51 at the end of the day after dipping slightly in a short period of time below or toward 1.5070. In Canada, in Canada, that was the major surprise for yesterday. The Bank of Canada surprised the markets with a sudden rate cut by 25 basis points towards 0.75%, down from 1%. And the bank noted that declining oil prices is weighing on the economy and likely to delay the full economic recovery toward the end of or around the end of 2016. Furthermore, the bank noted again that it still has some more room for a further measure in the next few meetings. We have to note here in the past 7 days, around 5 banks surprised the market, whether through cutting the rates or the deposit rate or through changing their language and changing their tone, including the Swiss National Bank, the Danish Central Bank, the Bank of Turkey and the Bank of England in addition to Bank of Canada yesterday. This also shows how the global economic recovery is not stable yet, and we believe at this time that we might see more and more intervention by the central banks or by other central banks in the next few weeks. As for the U.S. session, also yesterday, more economic releases or more economic figures came in with more disappointment. The U.S. or first of all, the U.S. housing start indeed increased by 4.4% in December, which is higher than the market estimates. However, November's reading has been revised significantly lower toward minus 4.5% or comparing to instead of minus 1.6%. Moreover, the building permits came in contrary to the market estimates or the market expectations, declining by 1.9% in December, comparing to another decline of 3.7% in November. And this is despite the fact that it had been anticipated, or the estimates were to rise by at least of 0.8%. And this is also the second monthly decline in a row not seen since mid-2014. As for the Asian session today, there were only 2 economic releases from New Zealand and Australia. However, they failed to support the Kiwi and the Aussie across the session. In New Zealand first, the business manufacturing index increased toward 57.7 in December, up from 55.6, which is also the highest level in 2 months. In Australia, the HIA new home sales also increased by 2.2% in November, comparing to another rise of 3% in October. And the Aussie and Kiwi suffered yesterday, as the speculations now are rising that the Reserve Bank of New Zealand and the Reserve Bank of Australia will be next in line to cut the interest rates or maybe the deposit rates in the next few meetings or the next few weeks. As for the European session ahead, there are a few economic releases across the day aside of the major event for today, which is the ECB decision. We will speak, of course, about it in detail, but let's go back at least a little bit to look at the major economic figures during the European session. First of all, from Spain, the unemployment rate is expected to decline toward 23.6 in Q4, down from 23.7 in Q3 of last year, which would be also the third quarterly decline in a row and the lowest reading since the final or the last quarter of 2011. In the UK, the public sector net borrowing is expected to decline sharply toward 9.2 billion sterling in December, down from 13.4 billion sterling in November, which would be also the lowest in almost 2 months. Finally, the Italian retail sales may rise slightly by 0.1% in November, comparing to no growth in October, which would be also the first monthly increase since April of last year. Going forward to the US session today, we will be focusing on 2 economic releases across this session. The jobless claims, or first of all, the jobless claims is expected to decline back toward 301,000 last week, down from 316,000 the week before. Finally, the house price index in the US may rise again by 0.4% in November, comparing to a rise of 0.6% in October, which would be also the second monthly decline the second monthly increase in a row. As for the major event for today, all eyes are on the ECB decision today, which will be released at 12:45 GMT time, and more importantly, the press conference or Mario Draghi press conference will be held at around 13:30 GMT time. Yesterday, there were some leaks from the ECB that the ECB will propose to buy 50 billion euros of government bonds on a monthly basis for 12 months, or maybe they might even extend it toward 24 months. However, the euro rallied following the news, as it's a little little bit below the market estimates and might also even be already priced in the markets. However, the global equities managed to close the day slightly higher. Despite the leaks, confirmation still needed still needed today from the ECB. And furthermore, we believe that the ECB may cut the deposit rate even further to minus 0.5% or even minus 0.75%. We will publish a special report later today discussing the expected scenarios and the possible impact on the euro. Follow us on our social media sites, Twitter, Facebook and YouTube, also to receive the report and to get the latest economic releases and analysis. Good luck for today. Thank you for watching. We'll see you once again tomorrow.